Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good afternoon. Ira Epstein of Linn Associates with your financial market wrap-up for this Monday, the 15th of October, 2018, getting on to 4:20 p.m. Central Daylight Time. Tonight we'll be flooded with the events out of Saudi Arabia as to how the death of the Washington Post journalist happened. We're going to hear tomorrow, after we're through with that to a degree, the Italian budget, I understand, has been turned in, and it's 3 times what it should have been, according to what I'm hearing. Brexit still very much up in the air. Soybeans up 24 cents today. 2 cargoes of soybeans, including the tariffs, purchased by the Chinese. So we've reached that inflection point where they have to buy the beans, and we talked about that during the summer. There's only so many around the world. The dollar index did not get much of a bid on all this. Instead, we saw a number of bids coming into the foreign currencies. Gold getting props from the Saudi situation, from Italy, from Brexit. All of a sudden, the market responds differently. It's when you hit a certain point in the market and it just starts going the other way on you, especially psychology. When we take a look at the weekly chart of the S&P, you can see that high was 29.34. We're 200 points, approximately 190 points off that high on the close. And this is a close-only chart. I'm calling it in a down thrust. I've done something, and this does not mean it's correct. Let me start with that. I've given you the potential of what could be a Fibonacci rally back up if the high to the current break low, this is a daily chart, and if the market starts rallying into the different percentage points, 50%, 32, and so on. That just gives you where the market should have trouble at 2,800. Take out this low. This has to come off the chart until a low can be seen. What I'm pretty confident of is the high. I just don't know where the low is, but I wanted to get it on early for you. When we come and we take a look at swing lines, you can see that you've had a pattern of lower highs, lower lows. Bearish, obviously a vertical price decline. The market is well under the 100-day average of closes and well under the 18-day. When I take a look at Bollinger Bands, you're riding the lower Bollinger Band. If you look at today's close, 27.49.10, that matches up right with the lower Bollinger Band. You're literally on it. The days prior to this, you had been under it as the market free fell. Now the market's paying attention to that number. It's also, and I didn't put it on today's charts, paying very good attention to the 200-day moving average of closes. When we look at the slow stochastic study, momentum is oversold. So what we have is a market that is not trying yet to convert itself to an embedded reading. It has fallen rather dramatically in no time at all and oversold in a downtrend. In the NASDAQ, notice how the market started moving, and it did this on Friday, to the right-hand side of the Bollinger Band. Why is that important? 95% of the time, a market will trade within the bands. When it steps out of it, it's at an extreme. Look at it that way. Climbing back into it as it did on Friday and staying there today just puts the market back on that tone. Certainly the trend is down with lower highs, lower lows. The market is oversold in a downtrend, and you're bringing together the 100-day and the red line, the 18-day average of closes, could get what's called a bearish crossover yet. In the December Dow, like the other markets, you can see a market that's fighting right now and did close, by the way, by 0.4 of a point under the lower band. So you're under it today. On Friday, if we take a look, the market closed 25,316, well under the band. Day before under it and the day before. That's the way I'd look at it. Could tomorrow be a 5th day? Yeah, but I don't round to 0.4. I hope you understand that. I'll call that pretty much on it. And the market is oversold. So we have a common theme. And, of course, in the Russell, the leader of the parade, it didn't want to stay down today. It still has its embedded reading. I'll give you as a chartist what I think you can look at. When the red line here closes over 20, I think this vertical decline will have ended. Past tense, and I think the market will be in a rally formation to the upside. That does not mean I said bullish yet, but that's what I'm expecting. In the VIX, I still think the pros are selling. I think they got hurt when this market right here, here they made money again. It was here if they sold, and it's certainly way up above them. Some traders get out, others stay in. It depends what the market did. If you look at that one day up, it only had 2 days that hurt them real bad after that. In the bond market, is this market making a bottom again? That's the question. The trend is down, let me show you, with lower highs, lower lows, or lower highs and a higher pair of lows. Yeah, that's why I'm wondering. If you take out 137.30, I go right back into the bear mode with lower highs, lower lows. If you take out 138.31, well, the 18-day average resistance is 139.4. You do change that pattern, and that will effectively have ended that big break cycle. You're not getting the same pattern in the 10-year notes yet. You could take out 118.14.5, and that's exactly what happens. So we're at a very crucial time in these markets, and I think the opening tonight is one that you got to pay attention to on it, and it does the market carry. TLT already has the market in an uptrend on the swing line. It's countered completely by the fact that prices are under the 18-day average of closes, but it did have an embedded reading that occurs when the slow stochastic momentum oscillator is laying flat under 20 for several days and gets a close over it. When that happens and it closes over it, if it doesn't immediately get that red number the next trading day under it, the odds favor price and the 18-day average are going to make a run at each other. What would prove that wrong? Well, you got to get under 114.30 and then stay down. However, even then you're oversold again. In the dollar index, the battleground's now, I think, 94.64. Yeah, the lows not of today, but of Friday. If the market takes that out, you've already got the potential of the lower highs, lower lows, but you're not under the 18-day average. Today was an outside day down, which means you took out Friday's highs and lows. To get the dollar bullish, today's high, whether you take out those lows first or not, today's high becomes the key. Take that out, and this area becomes a base for a thrust to the upside. But it's got to be done on Tuesday or Wednesday for that to occur. At least that's my charting rule. In the December eurocurrency, we have a lower low, higher high. We had a run towards the upper 18-day average that hasn't been able to get up there yet. But I'll call this a trendless market. British pound keeps coming back to this 100-day and 18-day average. The market's rough. Is there going to be a Brexit or not? Brussels does not like what the stance that Miss May has taken, I'm talking Prime Minister May, on Northern Ireland especially, and how it could be a legacy that they do, and it's not sitting well. So I don't know, but that's one of the big issues. In the Japanese yen, is the markets are looking all over the world at the uncertainty, the continuation of the decline in stock markets. This market has been getting the safe haven bid. For a long time, that wasn't the case. It's now got it, but I'm looking at the 90.06 area, and as you can see, today's high was just shy of that by about 5 points as the potential where the market starts running out of momentum. In Bitcoin, you went from the lower Bollinger Band, made a run, couldn't quite get to that upper number, and stopped against what resistance point? If you look at it, it closed under the 18-day average. We're still very much in the sideways action. In the crude oil, look at how Brent continues to lose against WTI. As you want to own the Brent because of Iran and so on, the situations, it's been coming, what, up. And then all of a sudden it rolled over, and you can see how that spread has changed. And when that spread changed, we ended the bull phase. Now you've got lower highs, lower lows. The EIA is saying that next month, November, we're going to get in America another 100,000 barrels a day of WTI crude because we have 7 large projects in the Permian Basin, Eagle Ridge, and so on, Eagle Ford, that are coming on. What I'm saying is next year you're going to get even more than that, because when the new pipelines can handle what we're throwing at them and you get some excess capacity, you're going to see even more production out of that. In the WTI, lower highs, lower lows, in a downtrend, but very oversold. When we come to rebob gasoline, it's hard to push the market against a 100-day average and a lower Bollinger Band. I'll stick with what I said. I think the pros are lifting shorts in here. In the nat gas, the cold weather's nat gas's friend. But we have divergence. We have momentum turning down, price stalled out, but still in an uptrend with higher lows, higher highs. If you take out right through here, this 313.80, I would say the bulls have a problem at that point. You at least neutralize the chart. Until that occurs, market's being run by the bulls, but I am concerned about the overbought condition. Any reading on a slow stochastic over 70, if both numbers aren't going over 80 sideways, is overbought. Let's talk about our market center for you, because this streams the quotes to you. Now, I know you watch my videos. They play right through here, and here's the neatest thing. This is actually my smartphone that you're seeing. When my videos come out, a message just pops, not a text message, a notification message. You can turn that off, of course, but you just click it and the video plays. You get a price alert, click it, it'll just open for you. You don't have to hit 5 different buttons. We have voice activation in ours. You can say, bring me up an S&P chart, and here's the different studies I put on it. But in quotes, you can set up a custom
Current
quote
prices.
page.
E-mini S&P 500 September is up 2.25 and last traded at 2,000.
Pretty neat. You're in your car? Yeah. What about other messages we want to send you? Here I am in that video that we talk about, different preset pages. If you're a grain trader with spreads or crush spreads, they're there for you. All the news stories, and I'm telling you, a lot of cool news is in this. We've got it there for you. So how do you try it? This is what our clients get. Give us a call. Go to our website. When you sign up, we're going to send you a user ID and password to get you all signed up, and you'll be able to go on your Android store or into Apple and get it as well, and click up here. But remember, you need your user ID and password. If you click up there, it'll take you to our sign-up page. I'm Ira Epstein. Thanks for watching. I'll see you tomorrow. And remember, early in the morning, there is not going to be, early in the morning, my regular morning video. I have an appointment out of the office. These videos will be fine. Take care.